6% correction ain't nothing. And I'm not saying it's going to happen, but there is a risk of it. And with insurance cheap, it certainly makes a lot of sense to add a little bit to your portfolio. So here's what you need to know before the bell this morning. Earnings continue to roll in here. We're getting right into the heart of it. Netflix is out today. A lot of big companies are starting to report. Next week, we get really into the heart of earnings season. The next 2 weeks are extremely busy on earnings, and we're going to have lots of earnings reports driving markets. And then, importantly, the buyback blackout window opens back up at the end of the month. So we should see, typically, seasonally speaking, starting today, tends to be a little bit weaker period in the markets as we kind of process earnings. A little bit more volatility pick up, won't be surprising. But again, this kind of market action has been fairly weak already. As we talked about a bit yesterday, we've already been kind of just slogging around here over the last, really kind of couple of weeks here. We're pretty elevated above the moving averages as well. As I noted in today's daily market commentary, a reversal back to the 200-day moving average is about a 6% decline. And that's certainly well within historical norms for a corrective or consolidative pullback. The one thing that really kind of, I don't have a lot of worries about the market right now. There's nothing out there that suggests we're going to have a big crash coming at any time, at any point here soon. We just don't have kind of the economic backdrop for it just yet. But one thing that does concern me is the level of retail speculation in the markets. Retail investors are now making up 14% of the trading volume. That is the highest level on record and higher than it was. We hit a peak back during the kind of the meme mania in 2020, 2021, when everybody was chasing, retail investors were sitting at home, they had no job, couldn't go anywhere, so they were just trading stocks on their phones. That kind of meme mania, they made up 12% of trading volume at that point. They're now at 14. Again, this is a lot of single stock speculation, a lot of kind of leveraged ETFs, those type of things, and we're seeing this across asset classes in general. But we're seeing that's the one worry here when you typically have that kind of big spike in retail speculation. That typically is closer to a near-term market peak. Again, just it's always kind of the contrarian indicator. Now, does that mean things are going to basically, fall apart tomorrow? No. As we saw in 2020, it went all the way through 2021 before we actually had the pullback in 2022. So it can last a while, the speculation level. But that does worry me just from the standpoint that it is getting very, very elevated here, very exuberant in terms of positioning, as well as overall sentiment, and that typically is a setup for at least a short-term correction. That's why I'm kind of watching this 200-day moving average very closely here. That would give you a decent correction. It would work off some of that speculative kind of fervor. We are on a short-term momentum signal. We are working off slowly. This kind of slog in the market here over the last week or so has really started to work off some of that overbought condition, but we're still overbought here and still very deviated from mean. So I can't kind of stress enough to do a little bit of work in your portfolio. Just take some profits, rebalance some risk. Yesterday we added in our platinum model, we added some out of the money S&P puts for October just to try to hedge portfolios here just a bit. Again, just insurance here, when you have this kind of speculation in the markets, and particularly when you have very, very low levels of volatility, which has kind of been the hallmark of this market over the last kind of few weeks in particular, insurance gets very cheap at this point. And so again, you should not ignore risk in your portfolio. And again, with insurance cheap right now, think about, hey, a 6% correction ain't nothing. And I'm not saying it's going to happen, but there is a risk of it. And with insurance cheap, it certainly makes a lot of sense to add a little bit to your portfolio. So again, that's what you need to know before the bell this morning.